So for the first time in 2019, the government of India's fiscal structure altered and now looks more like a normal OECD country.
And for India to access global value chains at the right level, not at the bottom in terms of raw materials, but at the real value add, you need the expertise and ideas. So there needs to be a degree of openness.
If you can produce the lowest cost power in the world, X or China, right? You can attract the entire AI data center race to India.
So judicial reforms or reforms related to timely settlement of disputes, timely outcomes of problems, I think that's a very important element.
India is a very critical market for the global market, right? So therefore, doing business with India is very important, non-negotiable.
So contrary to what most people think, we are not a labor-intensive economy. We've become a capital-intensive economy.
I hope the Indian bond markets will benefit massively out of the discussions that we are having and the kind of people we are able to bring together under one sun. I really found the keynote speech very useful, very interesting, and the perspectives on my panel were very, very interesting, especially the perspective around how international investors and international players are looking at the Indian market. So yeah, very keen, and thank you again for doing this.
If you want to support more infrastructure growth, you want pension fund, you want insurance company to be able to invest more into those areas. Well, it's my first time joining the assets event. First of all, it's so interactive. There's questions, and then I really love the moderator who really asks tough questions. But it's like India. People love to talk, and then it's really what I like is atmosphere. I also like the attendees. It's a very nice mix of the investors as well as a corporate.
These kind of summits also bring foreign flavor and what they think about the Indian market. So I think it was a fantastic summit, and thank you for organizing and having me there.
Today, the AUM is roughly around 140 billion, and we intend to double it in the next 3 to 4 years.
A very well-curated event. At the very outset, we'd like to thank for us to be part of this event year on year. And it's nothing but a great learning opportunity for our group to contribute in the best possible ways for this market that keeps rewarding all of us. More so, the event was so well curated. It was so good to meet all participants, whether it's the issuer's end or the investor end. Very interesting to understand in such uncertain times the diverse perspectives that they have and the positivity with which we're still moving in the market.
It was an impeccable event with a great mix and diverse panelists present, giving their views, especially in this uncertain times about how the geopolitical situations will pan out, how the views are taken from the rating agencies, from the corporates. We had views from all of them. That was quite helpful.
The biggest change that we've seen in the Indian corporate world is that it's not a mad rush for growth. Rather, it's more balanced in terms of disciplined growth with basically diversification and resilience.
While there has been a temporary pause in pricing the IPO, but we are seeing the issuers continue to prepare on the documentation.
Private capital is not actually replacing anything. It's not replacing bank capital. It's not replacing public capital. It's only acting as a stopgap arrangement sometimes.
there's a risk that the quantum of flow into asset management companies can reduce, and which is also resulting in probably, let's say, IPOs getting deferred.
There would be pockets of risk, of course. When we did the UER exercise, we identified a couple of sectors. So, for instance, petrochemicals and airlines.
The debt capital market gives as much funds availability as much as the bank credit. So, it has become an equal weightage